But let's get into the very crude awakening of the world of crude oil. Let's bring on Dolapo Oni, who is the head of energy research at Ecobank via Skype. He's in downtown Lagos, Victoria Island. Dolapo, it's good to see you. Good morning. Thanks for coming through.
Good morning. Thanks for having me.
We appreciate your time. It's a very busy week in terms of news, the news cycle, since we started the week. We're finishing the week today, no thanks to the war rhetorics, fire and fury from Washington, even when North Korea is yet to fire any missile, as the leader there says he will do, and the retaliatory words from Washington. This is part of the news this week for the crude oil market. Put this together for us.
Well, basically, the market is reacting in a way, and to be really sincere, the rhetoric should actually drive oil prices up, because what it's doing is that it's actually providing some weak sentiments on the US dollar, which then makes the US dollar weaker against other currencies and should drive oil prices up. But what we are seeing from OPEC, and where they're telling us they're going to cut production, they're going to reduce production, but instead production has increased steadily for the past 2 months, is actually what is driving oil prices down now. And then we're also seeing that US inventories are also still rising, so oil prices are down. Whereas, I mean, just yesterday, oil prices rose as high as $53, and we thought they could enter 54.
And now this morning, prices are down again.
Exactly. So, I mean, traders are now starting to worry that, okay, it's looking like OPEC is not really succeeding in making cuts. And if you're already looking at numbers, you know that Nigeria is pumping a lot more now. You know that Libya is also pumping a lot more in August. So by the time we see August figures, it's likely that August figures will show that OPEC is still producing a lot more. So if we have 3 months in a row of higher production from OPEC, I mean, then the cut is really not really, it's not really working.
If the OPEC try to balance the news, as it were, look at the monthly report came out and said, look, Nigeria, Libya, Saudi Arabia is pumping more oil and what have you. Then you have OPEC just later in the day, on the same day, issued another report and says, look, global oil demand for 2018 will increase by about 220,000 barrels per day, and that OPEC's share of that increased demand would also go higher. That looks like, look, we're pumping more, but hold on a second. Don't panic, everybody, because we see demand ahead and hoping that that will get the futures deliveries, the price for futures delivery to also start going higher and try to push the spot market also in that direction.
Yeah, you see, that's the thing. At this point, it's really all just rhetoric, because to some extent, we expect that demand will continue to pick up next year. Most analysts are already including some modest expectations for demand growth next year. I mean, we're carrying like 0.7% expectation for next year, but most analysts in the market are also carrying somewhere in the region of 0.8 to 0.9% increase in demand next year. Now, what that means is that, yes, there will be room for more OPEC production, but compared to where OPEC is today, I don't think it's a lot of bandwidth for them to actually start ramping up production the way they are. We've seen production rise about over 300,000 barrels in the last 2 months. Last month was 173. The month before that was about 155, 156. So you are looking at a significant increase. And if it continues in this month, then OPEC has really ramped up another 500,000 barrels per day. Then you start to ask yourself, how much can they really cut? Because right now, what Iraq is pushing for is that, look, Saudi Arabia, you have to be the one to make the cut. But think about it. Saudi Arabia has actually ramped up for 2 months in a row now. Because on the other side, Saudi Arabia has to balance the expectation of its investors, because Aramco has to do an IPO next year. They want a higher price, but if they can't get a higher price, the other option will be to then increase production so that revenues look good, at least for the IPO.
With all this in the news, now let's look at the supply side of things. With Saudi Arabia saying, look, we're going to begin to tinker with our supplies to Asia, to Europe, and the US moving forward because of the way things are. Is it all part of the story for the kingdom to try and make sure that the Aramco's IPO don't fall in water, as it were, trying to hold up the expected value or valuation of Saudi Aramco? Some put it at about $2 trillion. Some said about $1 trillion. We don't know what the final figure really is.
Yeah, you know, it is very valid point. The problem right now is that the market is really reacting to inventory levels in Europe and in US. Inventory levels in Europe are still at least 5% higher than the 5-year average in the past 5 years, the average in the past 5 years. So that's a bit of a worry, because what that means is that clearly as long as oil prices remain in this range, they'll keep on buying. But once it tries to rise, maybe towards the 53, 54, 55, they'll bring oil out of their inventory. They'll crash the market a bit again. And then in the U.S. also too, inventories are still a little bit high, but then they fluctuate a lot more. So this week they're up, next week they're down, and all that. So, but general commercial stocks level are still slightly, maybe 1-2%-ish higher than where they used to be. So what Saudi Arabia is essentially trying to do with this mathematics is that if they cut supply of their own crude oil, which is heavy crude oil, don't forget, shale is really light sweet. So for refiners in America who want to produce middle distillates like diesel and so on, they need that heavy crude oil. They can't keep on buying a lot of light sweet, even from West Africa. They can't keep on buying a lot of light sweet. So what they are hoping is that if they reduce their inventory levels of the heavy crude oil supplies to Europe and to US, inventories will drop, and that would force them to come after, more crude oil demand and bid for higher prices, and that would help prices go higher. But then again, how sustainable is that really? Over a period of time, eventually, that sort of demand tends to fizzle out of the market.
Dolapo, let's bring this back home. The Nigerian government officials are still very optimistic, chest-beating that, yes, we can still do 2.3 million barrels per day and sticking with that very sticky figure for 2018 budget preparations and rolling that moving forward from where we were 2.1, 2.2. Now they say, look, we're very confident 2.3 million barrels per day for 2018 budget is achievable.
That it's always a concern to me that we seem not to take the lessons from the crisis we've had in the past. We need to still look away from oil, and we've been saying this for a while. It's starting to sound like a broken record. We can't keep on increasing the budget benchmark for oil every year. There is no certainty. In fact, 2018, it's been said on record that it's going to be a volatile year for oil. Very volatile year for oil. We're seeing a lot of developments in the world of electricity, electric cars, and batteries and so on. And we're seeing so many countries making moves towards this. So it's a question of how do we raise revenue from other sources and reduce our dependence on oil. So in my view, the ideal thing would have been to retain, production levels from this year, retain budget benchmark levels for oil from this year at 44.5, because we've barely survived this year, staying from $4 or $5 above their benchmark range. So maybe there's no guarantee. And next year being a more volatile year, we should be more hesitant. But again, we also have the OPEC benchmark as well too. OPEC is planning to impose a production ceiling on Nigeria at 2.2 million barrels per day, or tentatively 1.8 pure crude million barrels per day. So there's no guarantee that we can push the 2.3 unless you're talking about condensate, unless you're talking about your local refineries consuming a lot more of the crude itself. That would be a hard one to achieve as well too. So I think it's a bit optimistic and needs to be addressed.
For about 2 minutes, some folks who are in the field of offshore oil and gas business will be in Nigeria and Lagos next week, and we hope to speak to about one or two of them here. But again, so what's your view about this? This new, what you call the blue ocean for us as far as drilling, new investments, and all that is for us in Nigeria. When you folks talk about, well, let's get a little bit away from inland to shallow waters, they will just move all the way down to the high seas, as it's called.
I'm all for that. It's relatively more expensive, but then if you look at Nigeria's reserves, a lot of it still lies further offshore, and we haven't done so much exploration compared to our peers in West Africa. It seems everywhere you drill offshore Senegal right now is going to be a discovery. Ghana is having a bit of joy as well in the deep water. Cote d'Ivoire has recently had some discoveries as well in the new San Jose Basin. So there's some potential that we haven't really explored in the deep water. But I think with the current oil price in the market, not everybody can afford to do that. Only the IOCs, and we've recently signed new deals with Shell, with Chevron. So there's some positivity around it, and I think it's a good move.
Dolapo, do have a great weekend. And if you discover oil at your backyard, let me be the first to know.
I hope I do.
You can enjoy part of the LOCs. It's called the local oil companies. If you discover oil, let's know.